What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is September 29th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to kick off a new series here on the Data Dash channel that I plan to do around every Sunday in the week, and that is the macro report. Now, the macro report is going to be very simple. It's going to be focusing in on predominantly price action and talking about major shifts that we can expect within the market as we take a look across the board at different types of assets, from Bitcoin to other cryptocurrencies, gold and silver, other precious metals, and even equities and different types of assets. Now, we're going to be talking about a lot in these macro reports, but if you want to see me cover a different type of financial asset that I haven't talked about here on the channel, or I don't talk about in the macro report, leave a comment down below. And if you see someone else put a comment on a topic or a certain financial product that you want me to cover, give them a like so I can get a good idea as to what you all want to see. I want to make these videos for you guys, as I hope it's become clear by now. I really want to talk about what's interesting to you guys. Now, before we dive into the episode, I usually won't have to talk about this, but I just wanted to share with you guys. I know many of you out there had some questions about the Energi airdrop campaign. This is a huge airdrop that's been going on for some time, and it's going to be up to around $300 worth of Energi at the moment, at least at the time of recording this video. So if you guys happened to submit your email and use the referral link that we had on the channel during rounds 2 and 3, you can go back and complete your KYC and complete to the activities in order to confirm your participation in the airdrop campaign. If you don't do that in this next few days, you will not get the airdrop, okay? It's a pretty big one. It's the biggest one I've ever seen in the crypto space. And for those of you who missed out on submitting your email and signing up for it, don't worry about it. You can go through, I think, and sign up for round 4. I'm not 100% sure if it's launched and everything, but again, just check out the website. They've got some documentation to talk about that. Don't want you guys to miss out on any awesome opportunities. It's free. So anyways, let's go ahead here and dive into the market. Now, you might notice here on the chart, if you guys happen to watch my recent video about how to become a macro trader, there's some violations here. We're taking a look at the daily chart, and along with that as well, we don't have our indicators. Where are our indicators at? Well, I decided, because this is the first episode of the macro report, I thought I might as well go ahead and showcase to you guys how you set up the chart, okay? So let's go ahead and set up our chart here so you guys can follow along, and you guys can, if you want, you can copy my trading style. I don't really care. I'm not charging anything for it. Anyways, so let's go ahead and set up our indicators here. So there's really 3 indicators that we're going to want to add here to our chart. The first one here that I like to have at the top is the squeeze momentum indicator, okay? So we're going to go ahead and type squeeze momentum. All right. Now, it might be difficult to spot the indicator because sometimes TradingView doesn't always put it as prioritized on the sense of the likes, but it has the most likes out of any indicator, and it's the one by Lazy Bear, okay? Now, again, for you guys who may not know about it, the squeeze momentum indicator is a variation of a previous indicator that's been around for some time, and I use it in a little bit of a different format. I basically am waiting for a decline on the squeeze momentum indicator to signal that a trend is over, it's exhausted, that we're entering into a correction phase, or if it's entering from the red zone, it's exiting from the red zone and having a shorter bar here going to the upside. This means that bulls might be coming in, the momentum might be kicking in for either a bull run or for a rally of some sort. Now, the second indicator that we're going to add here as well is a commonly known one. That's the MACD, the moving average convergence divergence. And there you go. That's all you have to do, just like the squeeze momentum indicator. No variations on those indicators. And then the stochastic RSI. All right. So we've got our 3 different indicators here. All right. We look for crosses on the MACD. We look for early warning signs when the divergence is declining, or declining either downward or inward from the bottom. And then along with that, we look for both lines here in the stochastic RSI either entering in from the bottom into the neutral channel, which is a bullish sign, or exiting from the top channel to the neutral channel here, which is a bearish sign. It's a sign of declining momentum. Okay. Now, there's another thing that we're not doing, right? We got to get off the daily time frame. Now, there will be some times when we take a look at the daily time frame, guys, just to be clear with you all, because I know some people like to see the daily time frame, and also it can be valuable to really kind of put into some perspective, what's going on in the shorter term time frame. So we'll do that for things like crypto markets, possibly gold and silver. Again, we'll look at the daily sometimes, but we're going to be spending most time in the weekly. All right, I've rambled on enough. Just wanted to make sure you guys have everything set up good so we can go ahead and talk about it here. So let's go ahead. This is the general order that I think I'm going to do. We're going to take a look here at Bitcoin first. Now, Bitcoin, in the sense of its current price at the moment, is looking very good to me because I like discounts. I like corrections. We got, for example, the follow through on the wedge here. Some, again, are very vehement and talking about this being a descending triangle. Guys, look, you have rising lows here. You could, for example, discount the wicks. And in that case, yeah, maybe you could get, for example, something that looks more like a descending triangle, which is a bearish pattern. Either way, I never claimed that it would go 100% to the upside. I was saying it was 50-50. And then until we got a close or a move below or above one of these lines, we wouldn't know what the trend was. And that's what happened to happen. We got a correction. And once that came through and we closed below, or not so much closed, but had price tick below the previous low, it was pretty clear in this case that a sell-off was going to continue, right? So that's something you want to look out for. If you guys are active traders, I know a lot of people fretted over this sell-off. The thing is, if you guys are actively trading this market, then you should have stops set at those levels. You should be looking for those levels, as we've talked about, as other YouTubers have talked about. The problem is that there's many of you out there who are simply hodling and investing for the long term, and you're fretting over price. You shouldn't, because that's an opportunity for you to average in if you believe the price is going to go to some exorbitant level. That's what I've been doing on this cycle. I'm not trying to trade these markets. I'm not claiming to be a trader, right? Now, I'm a macro trader, but my macro trade right now is for the broader cycle. I'm trading until Bitcoin goes to anywhere from 50 to 100,000, if not higher in the next cycle, okay? But it's going to take time for that, and I'm not rushing it. So anyways, on the daily time frame, this is at a level where we look for additions if you're averaging it. We usually don't get 45% corrections. If we hop over to the weekly time frame, again, if you're just averaging in, I would say that at this point, at least for me personally, this is where I'm comfortable adding, cash positions that I have. The thing about it, though, is that as a trader, in my trader methodology, everything right now is ticking for Bitcoin to go lower because we haven't gotten a confirmation of a trend shift, right? The stochastic RSI hanging here in the lower range, not showing any sign of popping into the neutral zone yet. MACD cross happened back here in mid-August, and along with that as well, the squeeze momentum indicator has been declining consistently to lower levels on the weekly. So there's not much of an urgency for me to go through and buy Bitcoin as under my macro trading strategy. But again, I know historically this is probably going to be a range where I'll have given exception because the corrections getting out of the accumulation phase for Bitcoin usually are only around 30 to 40%. So the fact that we got a 45% correction is not only interesting to me, but it's understandable because we had a very quick exit out of the rally, right? Even if we consider the logarithmic function, the logarithmic chart here, again, a very, very quick exit out of the accumulation phase after we had our 80% correction in Bitcoin. All right. So I've talked about that enough. Let's go ahead and talk about some of the major altcoins here. I want to talk about ETH to USD. We'll also take a look at the Bitcoin chart. All right. So in the sense of Ethereum here, all right, I'm going to go ahead and turn off my indicators here just so we can get a better, clear view on price. I'm actually going to get off of Coinbase. I want to go ahead and get this on, I think it was Bitfinex is the chart you use. There we go. Okay. So if we take a look here in the daily, we're taking a look at crypto markets. The major thing here that I want to focus in on is that Ethereum holds here as it did over here on previous resistance, right? Making this support again, okay? This to me seems like one of the key significant price levels that we're going to look at here for Ethereum. It's nice to see that, again, we got pretty much a 50% correction from really the close range. Of course, the wicks popped up here on a few exchanges, but the general resistance range was around 320, 330, and the sheer fact that we got price back down to that range at a 50% correction, this is not where I get scared, guys. Again, even if you're hodling, whatever it is, this is where I get bullish. I love 50% discounts. And it's funny because crypto is still kind of giving those very predictable, easy corrections, going down to those very key levels, and people still get so chaotic and so scared about it. They're like, oh my God, why did I get so bullish on markets? The game is over. And it's still way up from where it was. It's more than doubled from its bottom down here, right? So you can let the emotions get to you guys, or you can average in, right? Again, I'm not telling you guys what to do. I'm not going to give you advice. I'm just letting you know what I'm doing personally. Now, if we take a look at the weekly, and we'll take a look at our indicators here. Let's go ahead and see what the market's telling us. Well, the squeeze movement indicator is still on the decline right now. What's interesting to me is the MACD right, is starting to slow its divergence here. It's starting to lower the divergence. We'll see if the blue line can cross here in the next few weeks. It has not happened yet, so we have not confirmed that this is setting up for a run-up just yet. The one thing that is looking kind of nice is the stochastic RSI, which might come up here. Right, it was starting to grow here with the bump up that we got in Ethereum over the last few weeks. But the major thing I'd say to take a look at here is really comparing, if you're going to be exposed into crypto in any way, shape, or form, it's a question of whether or not Ethereum is going to outpace Bitcoin. If we take a look here on the weekly, I'm going to go ahead and clear out my drawings. These are kind of back from the old day. Right now, things are looking really nice. Take a look here, crossing the MACD, stochastic RSI popping in. Squeeze momentum indicator, shortening, back up to the upside. Ethereum is looking pretty good, and the reason I say this is because it checks off all three things. The indicators look good. Price in this case, if we really take a look at the weekly or daily, right, we've been setting higher levels. You can take a look at the daily if you'd like to see it. I like the fact that, again, we've been setting higher lows every time, and we have any kind of small pullback. But the other thing here to take into mind as well is that Ethereum has not only had a major sell-off comparative to Bitcoin in this case. We'll go ahead and I'll go ahead and showcase just how much that is. Around near 90% correction. We talked about this yesterday. The reason why overall I'm so confident on Ethereum is what's going on in the DeFi movement. Now, some people out there are really curious about the DeFi movement. We're talking a lot more about that on the channel. But the fact of the matter is that there's actually something valuable being built on Ethereum. After the billions of dollars that were wasted on ICOs and the absolute oh God, I almost want to curse just saying how sad it was what the ICO bubble was. But the fact of the matter is it was an absolute fluke. DeFi is actually promising. There's actually value to be had here. There's actual disruption that's happening on the Ethereum blockchain. It's the reason why the Ethereum network is actually being utilized right now, where the fees are really ticking up on Ethereum. And that's not to discredit any other blockchain. I want to make that very clear. Some people somehow took that I was insulting other blockchains. The sheer message I'm trying to send here is that DeFi has got some really promising things. And right now, so long as Ethereum leads DeFi, it is going to extract most of that value. It is going to receive most of that value inside its market cap in the sense of its actual fundamental value. And you can see that through proof of the fact that people are actually paying decent gas fees on the network, right? All right. So last one we'll take a look at is one as per request. Again, it's not one that I'm really fundamentally excited about, but it is one that we need to be concerned about when it comes to trading in the long term, right? If there's potential opportunities. Now, I got to tell you, I will be fair. This chart looks really nice to me for a few reasons, right? Generally, we're setting a third higher low here, right? It's a little bit off from the trend line here. This is, I think, where many people started buying XRP. I remember I was watching that for a potential setup. There was all the trading view charts that were showing, 50,000% return. Look, guys, I don't think we're getting anything like that. But I will tell you all in the weekly, this looks really nice comparative to Bitcoin. You got the stochastic RSI popping here. You've had the squeeze momentum indicator setting up for a very long time to the upside, almost turning into the green. And then we also have the MACD. We got a cross. So I would say that if I was to get bullish on XRP, I've got all three indicators signaling that it looks good. Not to mention as well, a third higher low comparative to Bitcoin. Very nice. Again, this low is finding support on previous resistance back here and back here as well. And over here as well as previous support. And in the sense of XRP, I don't doubt that there is some potential, whether it be speculative or fundamental, and it's in the sense of the hype around it being used as a solution for a variety of banks across the world. They do have a lot of partnerships. But again, in the technical sense right now, I think the best thing that's speaking is the indicators here, right? So this is why I do believe we're seeing this shift from altcoins, and Bitcoins, right? I do believe we're going to see a decline in Bitcoin dominance over the next few weeks going into January of 2020. We'll see if it can hold on this line or if it breaks through and that we really have another altcoin cycle. That would be really exciting. But for now, I think the trend shift is very clear. I think the resistance range is clear and the indicators are showcasing very clearly that we're ready for a shift for altcoins to lead the market. All right, let's go ahead and talk about some other markets outside of crypto. Gold, still believe that we've hit resistance here in the short term after a 34% year-long rally. I believe we're coming back down here to 14.25. The reason I say that is because this was previous resistance over here multiple times for gold, and it's really the last significant major range here, quarterly range here at around 14.25. I think that's going to be the next target range for this to pull back to, and it'll be a nice healthy correction. It won't be too severe here. The second range that I would look for here is down here around 13.75, right? Previous resistance at this range for some time, but again, I'm waiting for one of these ranges to come through before I even consider picking up gold, right? You got previous resistance or previous support becoming resistance. I still have this backwards here. I need to change that. But the previous support of gold back here, back between 2011, 2013, serving as resistance. No need to overcomplicate it. The indicators are signaling that. MACD is about to cross here. We've got the decline in the squeeze momentum indicator. The stochastic 2 out of 3 indicators are signaling bearish. That means we're not touching it, all right? Unless you wanted to possibly consider short on it. I'm not personally. There's not much of an interest for me to do that, because you have to, you usually will have to trade with leveraged ETFs, and I don't think that there's enough momentum right now in the correction for me to want to do that. Silver going through its corrective phase right now. I was really thinking we touch 21 here for silver and really let silver catch up on the gold to silver ratio. But what we might have is very similar to what we had with gold, where we have to touch on the previous line of resistance. Now, this has been holding down silver for a very long time. We're taking a look at the logarithmic chart here. You can see just how significant it's been in the long term, right? This declining parabolic line. It might be that we really have to come down and test $16. I don't think that's going to happen. But if that was to play out like gold did on its line of resistance, and I'll showcase what I mean. I'm talking about this line here, right? Gold had to come back down and then had its rally, right? Now, let's be realistic. Is that going to happen on silver? I really don't think so. Either way, the momentum indicators are dying out here, and I'm waiting for a trend shift, right? We got the squeeze going down, got the divergence in the MACD declining, looking like it's going to set up for a cross in the next few weeks if this keeps up, and the stochastic RSI declining here into the neutral zone from the top. So I'm not eager to touch silver here. I'll wait till it cools down, finds a new support range, could be up here at $17, who knows. But again, right now, there's no eagerness for me to touch this right now. But I do believe in 2020, 2021, silver and gold will be plays to watch, okay? Now, let's go ahead and take a look at some of the major indices. I think the NASDAQ is probably the biggest index right now pointing towards a bearish downturn. Why do I say that? MACD crossed back a few weeks ago, not to mention, even though the squeeze momentum indicator is still ticking up, even though the stochastic RSI technically last really exited the bottom zone, not the top, and it's been bouncing around in here, the trend is inconsistent. It's inconsistent. And along with that, price here is what scares me the most. We're closing out of the ascending wedge. Now, if you all know, in the sense of price analysis and very basic TA, an ascending wedge, and no matter what support line you're using, in this case, is bearish. And as we're starting to outtake out of all of these lines, right, as we're expected to set higher lows here that keep in line with the trend, we're breaking it. And that's not good to see. Now, to be fair, this is the NASDAQ, which has been kind of overextended. It's been a market leader, and it's heavily been influenced by the FANG stocks. Is the broader market telling us the same picture? Let's go ahead and take a look. S&P 500 topping out at a lower high here compared to what we had back here in July of 2019. Now, it's not the end of the world, but what I'm going to be looking out for here is if there's any breach here, right, below this line, I'll uptick it a little bit. If we get a close below 2,900, a significant close, and possibly below the previous low of 2,820, this is going to be a really big red flag for markets, right? Because we can't get the cross in the MACD. Stochastic RSI, very similar, even though, again, it did step into the outer range. We really have been going through a very sideways movement. And this is around a consistent range where we've seen resistance in the past. And I think with the, with the markets right now, we've been really concerned about what Fed monetary policy is going to look like. And, it's funny because I haven't gotten as much interest in what's been going on in monetary policy than what I've been seeing in the repo market. That to me is extremely concerning. It either speaks to the fact that there's an overexposure to asset allocation and treasuries and different types of assets, and the banks ran short on cash surprisingly somehow, or there's huge issues of insolvency. I'd probably say it's the latter, and we don't know really what it is, but I can tell you all it's probably the reason why equity markets are still pushing sideways, even though the Fed cut rates, even though the Fed added to its balance sheet. Little thing that people didn't notice. I'll go ahead and pull that up here. We can go ahead here and get the central bank balance sheet here. Take a look at this. Many people didn't notice. Boop. Popped up there. Just a little thing that happened in the background. Didn't really get talked about much. Fed balance sheet increased to 3.8 trillion. The only banks right now declining are Japan, not Japan. Japan's going up. People's Bank of China and the ECB. We'll see what happens here. I'm really interested to see. We have most central banks of the major central banks in the world in the same position. The U.S. diverged off a while ago. Will we continue this trend? Will we put it back on autopilot? Who knows? It'll be very, very difficult to tell. All right, so let's go back to the chart here. Last thing I'll take a look at here, as I talk about on the channel a lot and I talk about in the newsletter, probably one of the biggest signs we're entering into a bear market is that small caps, which usually outperform, have been underperforming for a very long time and is setting lower lows here, okay? Now I'm looking here at the weekly, so I'll go ahead and take a look at the daily here so you can actually read it. And jokingly, I put third time's a charm, right? Is that the case? We're going to get a breakthrough? And no, we've been hitting resistance every single time here. It's absolutely bloody. Now, if we take a look at the weekly, turn off our drawings here, right? Let's take a look at our indicators. The indicators right now are signaling that we might get a turn to the upside, right? Squeeze momentum indicator. MACD looks good. It's got the cross, stochastic RSI, been bouncing around a little bit, but we did, again, we're entering into the upper channel here. Fact of the matter is that price looks really bad to me, guys. I'll be fair. The indicators aren't very clear in their trend. They're very short, and we just barely got across. We just barely started entering upward on the squeeze momentum indicator. And the stochastic RSI has been bouncing around. And the fundamentals, to be fair, don't look good to me. So I really don't feel like touching this right now. I will be completely open to the idea that equities can move higher, but the Fed is going to have to do a lot of things to keep the game going because corporate earnings are starting to decline. We talked about the huge drop in the amount of stock buybacks that's been going on. And we're also stepping in here into October, a buyback blackout period. So very important to note the amount of companies that can repurchase their shares and which ones can't during the period of earnings. All right, so we've talked about a lot of the market here, guys. But again, actually not just one market. I'm talking about it as if it's one thing. We've been talking about a lot of different financial markets today, guys. I hope you all enjoyed the macro report. Hopefully it was insightful to some degree. And again, if you feel like I missed out on something, if I just was too baffled, I didn't have my coffee this morning, and I was just, or maybe too stupid to think about looking at a market, leave it down in the comments down below. I'll take a dive into it. We'll take a look at it on the weekly time frame. We'll take a look at it against the indicators. I'll provide some thoughts on price, potential reasons for a trend shift. I think there's a lot of interesting markets out there. We got a lot of trends in equity markets. We got the cannabis markets we didn't take a look at today, but I'll definitely consider looking at that in the future videos. So again, let me know down below in the comments, and I will try to satisfy you as any way, shape, or form that I can. All right. So anyways, guys, hope you all are doing well, and I'll talk to you guys in the next video. Stay tuned.